What's up, guys? What's up? What's up? What's up? What's going on? Today is Monday, the 23rd of December. Monday, as opposed to Sundays, which is my usual recording session. Didn't get to it, as I mentioned in passing last week. I have a daughter, and she's amazing, and I love her to death. Everything they say about being a parent is true. But man, am I fucking tired, and I'm not getting any sleep. So I didn't get to it yesterday. So let's see if I get through this today. Let's plow together through this together. So let's start with Bitcoin. Bitcoin, as I mentioned on Twitter, there is one level to go all in at, and that is the 73.7 level, right? This is just a beautiful level technically. We get the consolidation for like 7 months. We get the perfect double rejection at the weekly, and we get the breakout. If we retest this level, it is a blind buy to me personally. If you don't want to buy that, that is fine. But to me, that is a beautiful buy. However, a friend of mine pointed out, rightfully so, and I'm not saying that he suggested or implied that his comment meant that it is therefore an impossibility. However, what he said is true. Historically, this is true. We have never, ever retested previous resistance as support during a bull market. Now, that means exactly what I said, right? So we get the highs here, we get the breakout. We never retest this level as support. It's true. Same thing happens here, right? Consolidation, breakout, never get the retest as support. It's true. So he's saying, well, same thing will probably happen here. Probability, right? Historically, this is it's unlikely to happen. It would be a first time, which is true. However, when I post something like this, and again, I'm not saying he suggested otherwise or whatever, I'm not putting words in his mouth. I'm just saying that this isn't a prediction. If I post this chart and I say I want to buy this level, doesn't mean I think it's going to go there. It's just a plan, right? It's not the final destination. It's not I'm not holding up a crystal ball saying I know for a fact price is going to go there, or even I think price is going to go there. No, I'm just saying if price does decide to go there, that is the level at which I'll buy. Now you could say, well, if things are really, 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 really unlikely to happen for whatever reason, why even plan for it? Because things always fucking happen in crypto, right? Everything you've never planned on happening always happens in crypto. Oh, you think your money is safe on FTX? Guess what, buddy? It fucking ain't. Stuff like that happens all the time, right? I mean, how many people bought Luna thinking it was the next best thing, thinking it was going to go to $1 billion fucking a coin? Guess what, buddy? It went to fucking zero in like 1 second, right? Shit happens. So there's no good reason, no good argument to say this is not going to happen. But, and that's a big but, you gotta have multiple plans, right? You can't be like a trader that comes in and says, well, I'm going to buy 73. And if that doesn't happen, I don't know what the fuck to do. That's really weird. That's awkward. You don't do that. You make plans for different kinds of scenarios. So let's go over a few plans I currently have. I do like this chart pattern. It's expanding, which is good. This could act as potential support again. So there's a few ways to play this, I think. You could see a quick break, then a reclaim of the level, and that would be a good buy. We could see a hammer, right? Hammer is a small body with a long wick. If we get a hammer at this low, that would be a good buy. So yeah, that's what I'm looking at, and I'm looking to trade it up until the upward sloping trend line. I'm not going to hold it until 200K, 300K, whatever you think is going to happen. I'm just holding it to the target of the pattern. If we break down and maybe even trade back up and then reject, I really don't see a reason to stop before 73.7. Obviously, everybody's going to bid this level, so it's going to be front ran. So buyers are probably going to step in anywhere in between. But we could get a random support level as well around 85, which could happen. But I mean, I don't know. I could see that happen. I could see this act as support. Just Bitcoin being Bitcoin and random, but I don't know. It's just a single candle, right? Still, it is a candle and it is a level, but it's not a high grade level to me. There's one interaction. It's on the daily. Is this even on the weekly? No, it's not even on the weekly. So this level means absolutely nothing to me. Well, maybe a little bit more than nothing. I'm just keeping it in mind, but I'm not bidding this whatsoever. If we get interaction with the level, and you see the level is respected, then we could see something like this occur, and I would be a buyer. But I prefer to see this level, something happen with this level here. You even see a breakdown, come back up, and then buy this level again. But for now, I'm just watching this market, not doing much with it except for watching. Then we got Doge, posted this on Twitter as well. I said I could go either long or short. No shit, Sherlock, like you have any other fucking choice, right? But I meant I had actual plans to go either long or short. When this started happening, I was almost convinced we were going to see a breakdown. You see volatility dropping. You see highs, lower and lower and lower highs. So this was pretty. This was bound to happen, kind of. It's as sure as you get in trading. I was willing to sell the retest, underside retest of this trend line. Didn't get it. And to me, this is the blind buy level of Doge, 22 cents. See if we get it. If not, I'm waiting for this to reclaim, get back inside this flag, and then see what happens. This chart pattern is complete. If it goes back inside, I don't consider this a continuation pattern anymore. It would have been if we were to break upwards, but now that we've broken downwards, I don't consider this a valid pattern to use as a continuation pattern anymore. Then we got Ethereum. The perfect level is 2,800. Thing is, if we get the perfect level on Bitcoin, we're obviously going to crack right through this fucking level on Ether. We're going to be trading down to probably 0 if Bitcoin goes to 72. But yeah, in the meantime, I think 2,800 is the level to bid because it is the perfect, absolutely perfect retest of the breakout. I mean, it's acted as support multiple weeks. It's acted as resistance or close to resistance for multiple weeks. And we get the clear breakout, and it hasn't been retested yet. Then we have the trend line, which has been respected since June of 2022. Right, we got all these interactions with the level, multiple touches here, which is slightly lower down, but we could see something like this happen, right? But that would mean somewhere in April, which I don't think that will happen. So maybe it wicks down, or maybe this is going to be the level to bid instead of this one. But as I do prefer horizontals over diagonals, I'm giving the horizontal level the highest priority on this one. Aside from that, this could also be forming an inverse head and shoulder. Usually, or oftentimes, inverse head and shoulders are bottoming formations, but they can also be continuation patterns. And 2,800 would be a perfect level for the right shoulder to be created at, because it was also the level of the left shoulder, meaning that if this turns out to be an inverse head and shoulder, the price target for that chart pattern becomes 6,000. I actually scratched my nose, but I don't know if it looks like I'm picking my nose from this angle. It probably does, but I'm actually thinking of the Seinfeld episode. Anyway, I was scratching my nose. Give me a break, man. So yeah, that's the Ethereum price target for the inverse head and shoulder. Again, please do note that this price target comes with the pattern, right? If this pattern is invalidated because there's no right shoulder created, so we trade up and break out, the 6,000 price target is done. It's invalidated. It goes out the window. So please do not screenshot this chart. Then we break out of this range and then sell your position at 6,000, saying, I told you to sell at 6,000. 6,000 is only the target if the inverse head and shoulder chart pattern completes. I think I've gone over all my open trades already. I'm still short Aussie dollar. This is the triangle target. I know that is extreme. It's very ambitious. Confluence with this potential low here. The reason I don't think it's going to go down all the way there is because this is a huge swing low. But aside from that, I'm looking at commitment of traders, COT data. And if you look at COT data, you can see that commercials are the ones you want to be positioned with. Directionally, they're right more often than large speculators are. In any case, they were both net short and also relatively short, extremely short, a few weeks ago. However, you can see that there's a shift happening in their positioning. So not only have they gone from net short to net long, yeah, their relative positioning is just increasing exponentially. So yeah, I'm not a fan of this position for much longer, especially all the way to this target down here. I just don't see that happening. So I'm trailing this position, this stop, sorry, with an ATR based stop. So my stop loss is currently at this ATR level here, which I'm taking it down at the close of every day. Then we got the pound Australian dollar, ascending triangle, right? Got the breakout, confirmed breakout, but then the immediate reversal, which isn't great, but we're still above the upper boundary of the triangle. However, we are below the 3% of the confirmed breakout level, so that is something to watch. But my stop is in, and I'm not going to touch it unless something happens for me to reconsider that. Then we have DAX. Really like this market. This market has been looking really good, trending up. One of my best trades. That is what I'll do next week. If I get the chance, I'm going to go over some of the best trades of the year, some of the worst trades of the year, what I've learned from these trades, what I've learned from the year, what I'll do better next year. I usually analyze or go over my trades, analyze my performance, if you will, monthly, quarterly, and annually. So yeah, I'll go over a few of those things and lessons learned next week. I think it'll be good, a good watch, and good for me to go over and verbalize. So yeah, one of my better trades this year was on the DAX, and I think this is a beautiful retest, one you should just buy. It's beautiful. It's technically good, technically perfect, maybe even. Does that increase the chance of it working out? No, it doesn't. It doesn't. But it is a trade according to my system. and I know my system works because I have the data to prove it. And if you know your system works, you just um, keep submitting, you keep applying that system to the market, and on a long enough time frame, you'll be profitable. You'll be profitable as long as you stick to the plan, stick to the system. If you keep straying away from the system, it's clouding the data. It's messing up the data. So anyway, this is a level I had to bid. I really like the fact that this is immediately turned into a hammer. I would like to see a close above the high of the hammer, and then target 20,800, which is part of a larger chart pattern. Then we have natural gas, which I usually don't trade because it just fucking chews you up and spits you out. It's a killer market. Anyway, I really like this level. We got the resistance, support, right? Clear flip, support resistance flip on the weekly, which makes it significant. So we haven't broken out of it on the weekly yet. I mean, we have broken out, but we haven't confirmed a weekly breakout. We have a daily breakout, which is why I took the trade, and my target being the underside retest of this swing low here. So yeah, we'll see. Not really much else to tell you about this trade. It's a very straightforward trade. My stop is here, which is pretty wide, but as my target is pretty is up way higher, I could afford to have a wider stop. Solana. Um, yeah, with Solana, I also posted this on Twitter, right? What many people do is just buy random stuff at random price levels, or they'll tell you, you got a DCA, bro. Prices down, buy more. Prices down, buy more. Price down, buy more. And the thing is, that can work, right? If you have assets that are just up only. Like if you go to the NASDAQ, if you go to S&P, right? And you take a monthly chart, like, I mean, obviously there are huge down years where you just get absolutely obliterated. But unless you're betting on the biggest world economy to just collapse, if you bet on the American markets, the American dream to just permanently die out, this thing is just going to go up. I mean, especially since the 2009, after the 2008 financial crisis, we got out of there and it's just up only, right? Again, down years, obviously, that happens on any market. But here, dollar cost averaging makes sense. Now go to crypto, and I'm just pulling this out randomly, right? Take monthly charts on crypto. Well, this is a really good example to actually dollar cost average AVI, but most charts aren't up only. Not only that, what most people think is prices will go back to their previous all-time highs. These are all pretty new charts because most of them are new coins, and I'm trading on Woo now. So yeah, a lot of these charts are pretty new. But the point is, most alts do not go back to their previous all-time highs. And if you've been dollar cost averaging them, you're gonna get slaughtered, man. You're really gonna get slaughtered. So dollar cost averaging Bitcoin makes sense. Dollar cost averaging altcoins, it doesn't make sense. There's just not enough data to prove that is a viable solution on the long term. So if you decide to dollar cost average, I think there's only two. Well, there's one way to do it, which, for instance, I think I just went over Filecoin. Well, zero. Let's take zero, right? Yeah, let's take 0. However, this isn't a great example, but let's say you had previous price action, right? You had a bull market here, and then price just trades down, and then you get the bear market. And during the bear market, there's a clear pattern forming, right? There's a rectangle forming. Rectangles or inverse head and shoulders can become really nice bottoming patterns. They can become accumulation patterns, especially rectangles. Once a rectangle is formed and a clear support level is created, you can buy those levels. You can buy the lows within the rectangle, wait for the breakout, and then sell the rectangle price target. If you're just buying stuff because it's cheap or because prices are low, that makes no sense. When you think, oh, prices are down, I'm going to buy more. Prices are down, I'm going to buy more. Prices are down, I'm going to buy more. I'm thinking prices are down because just way more people are selling than buying, meaning nobody wants this fucking coin. You got to stop being emotionally attached to your portfolio. I mean, not your portfolio per se. I mean, I understand the fact that your money is involved, and that is almost always linked to emotion. But I mean, individual coins. You shouldn't be emotionally attached to individual coins. You shouldn't be attached to them because you were in profit on them once, and now you're breaking even or slightly in a loss. So you think, well, if I just hold this coin long enough now, I'll probably get back to profit. That is not the way investing works, and it is way different. It is way different than investing in stocks where there's actual companies making actual profits and hiring and firing actual people, and having it's just way different. There's just no comparison at all. Well, people do try and compare the two, and you just can. In my personal and most humble of opinions. But yeah, back to Solana. So this isn't a random level. I think this is a great level. And again, I am still of the opinion, which is also empirically true, and this has been studied, and I've mentioned this before. Most price levels are random, and most traders cannot tell the difference between random levels and actual levels. No, sorry, random levels just drawn by computers or levels drawn by experienced traders. But you got to start somewhere, right? You gotta have something to work with. So here we have the last high pre-breakout. We get this candle that breaks out of all these highs. This is the last high. Then we have the sloping trend line, which interacts with this level, and this level, which is also a perfect retest of the trend line. So we have both the last high pre-break. We have the trend line, which is a perfect level, perfect zone to bid at. We even get maybe the 200. Yeah, we get the 200-day moving average coming up here. So all in all, this is just a good level to bid. The reason why something is a good level is you gotta determine how many times it's been interacted with. Is it a horizontal interaction? Is it a diagonal interaction? I prefer horizontals over diagonals. But if it's been interacted with many times, if it's been respected, there's more reason to think it's going to be respected again. If it's just a random price, there's no reason. Let's say you're trading the weekly, right? And you see this price is going up. Or no, take this one here. You get this little ball of price action here, right? It's 198, and you're just going to go, well, prices are down, so that's why I should buy. And you're buying at 198. There's really, oh, actually, you could say, well, it's this level here. But you get the point I'm making, right? There's no, it's always better to buy a level where you have previous interactions with the level instead of just buying something randomly because it's down. And what a good level also has is a good invalidation level. So if you're buying the weekly, your invalidation level, your stop loss could be below this weekly candle here, which is a stop at 155. You could also trade the daily, for which you could use a stop below this candle here, which would be slightly higher, which would be 166. Then you go, well, what's the target, right? Well, depends. I took this on the weekly, so my target is also going to be on the weekly. So I'm actually targeting equal highs, and I'll see what price does at that level. Maybe sell most of the position, or maybe sell all of the position and buy a retest of the level. But we'll see what we do when we get there. I always put a stop loss order in immediately when I put the order in. I don't always put the take profit order in, because I also want to see what price does. If we get some kind of news, right, that's just way more bullish somehow than what we've already gotten the last few weeks. I don't see that happening, but and price just fucking skyrockets. I don't want to be the idiot selling 264 when we're going to go to 400 in like a day. So yeah, then we have dollar Canadian. Nothing changed here, man. Same position, just waiting and waiting and waiting. Trailing my stop loss, increasing my stop every day. My stop will now be right here, ATR right here. So I'll put that order in later on. I'm still in Monero, because man, this thing is fucking killing me, man. It's annoying the hell out of me. But I know if I close this, it's gonna go to target immediately. The reason I hate this trade is because the rectangle is just beautiful, right? Clean, just squeaky clean. On the weekly, this still looks clean. If you look, that is the beauty of hindsight. If you look back on this, you're thinking, well, why did this stress you out, right? Nothing happens. But then you go to the daily, and we get the breakout, you position yourself, right? You get the retest, you're like, okay, that's okay. We get the bounce, you're like, oh, nice. And we get the huge crash. I'm actually stopped out, fuck's sake. And we get the second breakout, so I'm repositioning. And we even get the nice hammer here, going up, almost closing at new highs. And we get the fucking nukes again, for Christ's sake. So we're back at the same level. I don't like this, man. If we have a rectangle that has been forming for like 2 years, and the breakout isn't aggressive and just clean, I don't trust it, but we'll see. Had a really nice short in the FTSE last week. We got the lows here. Wanted to short a retest, underside retest of the breakdown, but then we didn't really get a clean breakdown until this candle here, which was already lower than I wanted it to be, because these fireworks, not sure if you can hear the fireworks, probably not. Anyway, these lows weren't really convincing closes through the level, but they were still down. So I don't know, I was reconsidering if I should take the short, but then I did. I got in here, which was a retest of this last low pre-breakdown, and then my target was pretty ambitious, but it was based on the symmetrical triangle. Levels was respected here, and then I was thinking, well, already interact with the high, might as well target the low again, and we got it. As you can see, we got the high here, didn't go back to the low, got the high here. Well, yeah, got the low. Fireworks. Anyway, yeah, this was a really nice trade. I want to be short silver because this is a nice head and shoulders pattern. The reason I don't like this short, even though I have to take it technically, is because, again, of positioning commitment of traders. And I believe commercials are now starting to position long. Yeah, so as you can see, again, they are not positioned net long, they're positioned net short, but they have been more long than they have been in a very long time. In fact, well, it's not that long. September 2024, so it's only a few months ago. But I don't want to go against commercials. I don't think I have more understanding of this market than actual companies, industrials owning physical, actual silver, right? I'm just sitting here on my fucking screen, staring at my laptop, thinking I can do better than these guys. If there's a shift in their positioning, they know something I don't. So going against them is probably not the smartest thing to do. And looking at the 1 hour price action, I'm not going to put this order in anyway, regardless of positioning of traders, because this is too much price action going on here. If we get the breakdown and get the immediate retest, that is something I'm interested in. But all these highs, they can just turn into potential resistance if I get filled on the short, right? So we get something like that, probably. So that is why I'm skipping this short trade altogether. Yeah, I think that is it, guys. I think that is it. STRDY, actually, yeah, I still really like this project. I sold everything like 2 days or 1 day before I made the video where I said I de-risked almost entirely. I sold, I think, like 280 or something, which was okay. Gave back a lot of profits, but I bought most somewhere around here. So this is actually a pretty good example of dollar cost averaging again. If you think this is forming a bottoming structure, you could position during a bear market, but not that. I think that is the second thing, right? Dollar cost averaging during a bear market is something else entirely than dollar cost averaging during what is potentially the end of a bull market. I'm not saying this is the end of a bull market, but just saying there's a difference between dollar cost averaging between or during a bear market and the end of a bull market. Because if you get the bull market and then you get the end of it and prices are down, you're like, holy shit, I'm going to buy it because prices are down. And you get the lower high and prices are going to go down. You think, oh my God, prices are down. So cheap coins. Sell me all the cheap coins you have. And you just keep buying the lower highs and the lower lows. You're going to be fucking done for, man. When the bear market comes, you're going to be down like 90%. So stop saying dollar cost average to every single thing. Anyway, so STRDY, the reason I probably don't want to buy STRDY is because I had a bunch of on-chain coins and I sold them all, and it cost me like $2,000, man. I swear to God, that is fucking insane. It just makes me mad and sad and angry all at the same time. It's very confusing emotionally, but how the fuck can you sell coins and then pay like $2,000 in fees and slippage, man? That makes no sense. I mean, I've obviously I've done this before, but it's just something you cannot get used to. You just can't get used to that shit. It's ridiculous, fucking crazy. So yeah, if I were to buy back STRDY now again, I'd probably pay again like $2,000 in fees and slippage. I'm not going to do that. So unless they get to a centralized exchange, I'm probably not going to buy back. But you can mark my words on this one. They're going to get listed on Binance, and it's going to go to $27 in one candle, and that's where I'm going to buy because I don't want to pay $2,000 in fees. Yeah. I mean, there's 1,000 more charts to go over. I got the email from TradingView, like your year in review, and I think it said I had like 23,000 charts made or looked at or something. I was like, holy shit, that is insane. That is ridiculous. So yeah, anyway, guys, like this video if you haven't done so already. I'm looking forward to seeing you back here next week. I will be, like I said, go over a few of the worst trades, a few of the best trades of last year, this year, see what I've learned, see what I'm going to do better next year. You always got to be improving, man. So yeah, like this video, subscribe if you're not a subscriber already. Would really like to see you back here every single week. Please drop a comment if you can, just saying you love the video, you love my outfit, you like my beard, dislike the beard. you know, whatever works for you. Just feed the algo, man. Feed the algo. Appreciate it. Appreciate you all. If you're celebrating Christmas, happy holidays. If you're celebrating Hanukkah, you know, happy fucking Hanukkah to all of you. And if you're not, just well, get away from the screen every now and then, man. It can be rough out there, and there's always going to be next year. Happy trading, and see you next time.